Welcome back to another edition of Live Lunch and Learn. A little bit of a late lunch today, but that's okay. I have a special guest with me, mortgage broker Keisha Johnson, and we will be talking about the current state of the real estate market in the GTA, touch on the stress test and mortgages, and things like that as well. Before we get into it, though, I want to say that you're part of this show as well. So feel free to participate. If you have a comment, please type in the comment below, or even better, if you have a question, feel free to ask us a question. We'll be happy to answer it on the air if we have time. If we run out of time, that's okay too. We can answer it after the show, but feel free to participate. So don't be shy, say hi. And without further ado, I will bring in Keisha. Welcome, Keisha.
Hello, hello.
How are you today?
I'm good. How are you doing?
Very well, thank you. Very well. Awesome. And so last time you were on, we talked a little bit about the stress test. I think it was just before it kicked in.
Yes.
And we were saying that it might affect the market, it might not. So it's been just over a month now since the stress test has come in. So what are you seeing from your end with regards to that? Has business changed at all?
Yeah, it's no doubt that, of course, the stress test, it's making it a little bit more, harder to, of course, qualify. And I brought this up before because, it's not as if the stress test is new. It was first implemented around 2018, 2019. And of course, they named it right. I mean, it certainly brought a lot of stress to a lot of individuals because, of course, especially single income families, really pushing them out of the market. And so, it serves its purpose, of course, to some degree with regards to making it a lot more difficult to qualify. But in the same sense, they're still purchasing. Right. We do see that definitely it hasn't completely slowed down the market. There are people that are still getting out there and trying to get into this market. It's almost as if it's if I don't get in, I will never get in. And so what's your thoughts on your end from the real estate side with clients and having that feeling?
Yeah, no, I'm glad you asked that question. There's a lot of chatter about, are we in a bubble? Are we not in a bubble? Will, prices come down? Will there be a crash? So tons of talk about that. Having said that, we have seen prices soften from May to June. But I wouldn't read too much into that because before all this craziness, before COVID, before 2019, before the market really started taking off, this was a regular seasonal trend. May was always the highest selling month, and that's when prices peaked as well. And then they would kind of soften a little bit in June and then over summertime and then start going back up again in the fall. So I think we're back to that. It's obviously too soon to tell. It's only 1 month, right? So we'll know better once July hits in August and see if that seasonal trend continues. But I predicted this back in April. And I said to my, even in my videos, I was like, you know what? I think we're going to go back to a regular seasonal trend. And this is what's happening, at least from my perspective. It's what's happening. I mean, if it's leading to something bigger, hey, you never know. But for now, this is exactly what's happening. Listings are up, so the supply is up, but the sales are down as well. But again, this is typical, so don't read too much into it. No need to panic if you're a seller, and if you're a buyer as well. I mean, now is the time to get into the market because the longer you wait, that annual trend is just going to keep going up and up and up. Yeah, 100%. So
how are you finding? I mean, are you still finding a lot of bidding wars? Has that cooled off a bit? What's the position there?
Yeah, no, we're still seeing bidding wars, and agents and sellers are still positioning their properties for a bidding war. So, for example, because prices jumped tremendously from January this year to late March, we had a 3-month skyrocketing of prices, right? So there's a new norm now. I mean, I hate to use that term because it was overused in 2020, but there is a new normal for home prices, especially here in the GTA. So we have to adjust that value. So if a value of a home is, say, $1.3 million, which is about average now, so we're still seeing people pricing them at 1.19 or even just under $1 million to get that bidding war. But what's happening is some of those sales are not getting the bidding wars, and so the sellers are not getting the prices that they're looking for, and so then they're taking their house off the market and putting it back on at the price they wanted originally. Right. So we're seeing a lot of that, right? So we're not seeing the crazy bidding wars we were in January, February, March, but we are seeing some select bidding wars going on for sure. Yeah.
That is true. That is true.
Yeah, and we're going from maybe about 20 offers on average to about 2, 3, 4, 5 offers, something like that. So still quite competitive, but greater chance for buyers. That's why I'm saying buyers should get in now, because come the fall, I predict things will get crazy again. That's my prediction.
Yeah, I think with a lot of my clients, with regards to should I take a step back? It just seems a bit crazy. My suggestion is always, there's no better time than now, because the more you kind of sit back and wait, I've had clients from last year, they're saying I should take a step back, and look where we are now, the values, because the prediction was that, for their own prediction was that property prices were going to go down.
Yes.
Even when COVID hit, that was the thought.
That's right.
That prices were, lenders scaled back a bit. They started to get more tighter on their guidelines and everything, not knowing where this market was going to go.
That's right.
But we've seen that it really has not eased up at all. It continues with that trend. And even, for individuals that are getting in the market right now and, purchasing, we'll take it back to the stress test, actually, right? For those who are getting in to the market. And of course, the stress test is put into place, one would say, to kind of protect, the buyer to some degree, of course, because when the economy starts to recover, right, we're going to see, of course, rates will take its time to go back up, but it will happen. All right. It will happen. And so the big question is, in the next 5 years from now, right, when rates are going back up, are you able to sustain a mortgage of, let's say, $700,000? Right? Are you might be even barely scraping to keep up with the mortgage payment right now.
Yeah.
And so, I think at this stage in the game, we really have to start to position our mind. Homeowners have to start to position their mind to understand that this quite possibly might be where I'm going to be in terms of my monthly mortgage payment. And you have to start to try your best to position your finances to meet that. Just to give you an example, let's say if you have a property of around 500,000, right, 5-year fixed term, let's say amortization of around 25 years, right? A fixed rate of 4.79 around now, you're paying maybe about 2,000, maybe about 2,834. Let's say rates go up to around 6.95 as they are predicting. Let's say maybe in the next 5 years, as predictions are saying. That means your monthly mortgage payment is going to be around $3,487. And so this is what the stress test is kind of preparing you for. Your income right now, right? Can it sustain that mortgage? And if your income right now cannot sustain that mortgage, you won't qualify, because the likelihood of rates going up to that is quite possible.
Well, I agree with you there for the most part, 100%. Personally, I can't see rates jumping up that much, because right now, yes, if the posted rates are 4.79, but there's always the discount, right? So you know better than I do. We're getting rates under 2% right now, right? And the stress test being at 5.25 or whatever it is, that's something 3.5 or sometimes 4%, almost 4% jump. So it's very unlikely that they're going to jump 4 or 3, even 3% in the next year, 2 years, something like that.
Definitely not.
Yeah, right, definitely not. And by the time they do get up to that level, if they ever get up to that level, then the mortgage will have been paid down at some point, right? So that's going to reduce the mortgage as well. So and that's the problem that I have with the stress test, right? So we're forcing people to qualify for a mortgage now, that's not going to happen for maybe 5 or 10 years down the road, right? So, and who knows how much lower their mortgage will be at that point. Right?
At that point.
Is that fair?
That is fair, because we're not looking in the market. Predictions are that rates are not going to actually start to do that upward climb
Yeah.
until around, let's say, maybe 2020, latter of 2022, maybe 2023. Right.
Exactly.
Yeah. So, I mean, even for individuals right now that maybe you don't have a high, balance, and you have a few things that you need to get done where you can take out equity out of that
Yeah.
property,
Yeah.
now would be the perfect time,
That's right.
right? Kind of
That's right.
lock into that very low rate,
Exactly.
and then ride that wave out. Right. So, but
Yeah.
we all want to position ourselves, of course, because you just never know where things will go. And you want to make sure that finances are in order. But definitely, definitely not a spike. It's going to give you
Yeah,
some time.
no, definitely not. Yeah.
Yeah.
So you're right. Even if it goes up in 22 or 23, it's
Yeah.
not going to be a 2 or 3% spike. It might be a
No.
0.25% or 0.5% or something like that, right? So
Yes.
yeah. Okay. So that's cool. So where do you see? Although we've talked about the interest rates already,
Mhm.
but are you also of the mindset that home prices will continue to go up? Because a lot of people
Yes.
said, okay, now what goes up must come down, right?
Yeah.
So
Yeah.
Yeah.
And once again, it's this 5-year mark as well, where when individuals start to kind of refinance their property, especially those that are in this market right now, purchasing the high values.
Yeah.
I think it will be quite interesting to see at that time, when individuals start to refinance, what that monthly mortgage payment will look like for them, if it will be attainable. If we compare to the US, we don't want to completely compare, because remember, we're a lot more regulated than the US, right? But I'm
Yes.
not sure. They had back in 2008, that they had the crash, right?
Yes.
And this was merely because the type of mortgage they went into, right? It was a mortgage that they went in very low, and in a short period of time, that mortgage actually, the interest rate, I should say, started to increase. And so people were literally walking away from their property. I mean, I've heard stories where they were actually leaving the vehicle in their property and saying,
Yeah.
take the home and the vehicle.
Yes, that's right. That's right. Yeah, we've heard stories.
Trying to make our money back.
Yeah,
right?
exactly. Yes.
Right. So,
yeah.
and this is because they couldn't afford the mortgage. And so, this is why, we have to be so careful when we come to that 5-year point where we're kind of refinancing, and the mortgage rates are no longer 1 point something. It's probably maybe 3 point something. Who knows? Maybe, in the latter threes. And if you're barely trying to afford that monthly mortgage payment right now, and it increases to that, what is that going to look like? Is that going to be a situation where, people are trying to get out of their homes? I don't know. But we are a lot more, when it comes to trying to keep up with our mortgage, I find that Canadians, we try to stay on top of that.
Oh yeah, I agree with you there, 100%. We are a lot, or the banks and the lenders are a lot more prudent when it comes to giving out mortgages, right? Than in the U.S. In the U.S., they give them out like they're, free samples or something, right? But also, Canada has probably one of the, if not the lowest mortgage default rates in the world, right? I think right now it's 0.24% or something like that. So not even 1%, 0.25%, right? Which is amazing. It's amazing. So kudos to Canada for that. But I'm still anti-stress test. All that.
It hasn't been easy. The stress is, I mean, I've had clients that's been bid out, left, right, and center because of, their affordability, right? It's they have to scale back, right? And as we mentioned before in the beginning, well, as we, stress test was there since around, 2018. And it went down. As COVID came in, it went down to about 4.79.
Yes.
And so now it's kind of gone back up. So it's not as if it wasn't there. It was there, right? And so people got a little bit of a relief. And now it's back up again.
It's back up again.
And so, that struggle is, especially they said it was just going to be the uninsured, which means if you only have 20%, if you do have at least 20%, but they kind of switched at the last minute there.
That's right. And applies to all of them, right? So
to qualify, first time buyers 5%.
So high ratio mortgages, low ratio mortgages, everybody. Exactly. So you mentioned refinancing. So I wanted to ask you about that. So I'm sure, and I'm going back again to the sudden increase in home values, even never mind 1 year, like in the last half year, property values have skyrocketed. So a lot of people gained a lot of equity in their homes overnight, right? So what would you recommend people do with that equity. Should, I know a lot of people say, oh, I just want to pay off my mortgage,
Yeah.
but others will say, you know what, you should use some of that equity to buy a second property.
Yeah.
So what's your advice on people who have a ton of equity all of a sudden?
Yes, 100%. I do believe that if you are able to sustain it, definitely pull out that equity and get another property. It's, sometimes we get so tied into paying down the mortgage. We're basically sitting on money. Why? When we can take that money out and invest it in another property.
Yeah.
Right. For those who have that mindset and have already done that, you can only imagine how they are reaping the benefits right now.
Yes.
Right.
Yeah. No. And I think there was a lot of that led to part of the demand that we saw, those bidding wars, because as prices went up, people were pulling that equity out and buying a second property, a third property, et cetera. Right. So now they're competing with first-time home buyers who, I feel sorry for first-time home buyers because they don't have that cash, that deposit, or that down payment to compete with all these people pulling out their equity. So,
yeah. What's your stance on that?
Oh, I agree 100%. Yes. No, I'm with you there all the way. If you can make your money work for you, by all means. I mean, one property is great to have because it's going to increase in value, but having a second property, now you're doubling that.
Yes.
It's a no-brainer. To me, it's a no-brainer. It should be done. But like you said, as long as they can sustain it, as long as they can afford it, right? So we still have to be prudent about it. Yeah.
Yes, 100%, 100%. Okay. And it certainly does, make a difference because, if you're able to, as you know, with real estate, it for the most part, it's been proven, right? It's a sure investment.
Right? Exactly. I mean, it's been around for as long as, and they're not making any more land either, right?
Yeah.
And, to all those people who are saying, oh, it's due for a crash, we're going to have a correction, and what goes up must come down. I mean, those are all fair points. But here's the phenomenon in the GTA, especially. I'm sure other markets have as well. Because there's so much demand here, as soon as there's any sign of prices coming down, you're going to see investors and opportunists come out of the woodwork and start buying up properties, right? And so as soon as now we have a new influx of buyers, what's that going to do to prices? Boom, it's going to kick them back up again. So so that's why I think that, there might be a slight dip in sales, but it's just going to keep going back up. And over the long term, it's just going to keep going up. Right.
Yes.
As far as I'm concerned, as long as this is an area where people like to invest, and as long as the demand is high, and I can't see that changing unless something crazy happens. We have immigration, a ton of immigration coming in the next 3 years. It's a great place to work. It's a great place to live. So things are always going to keep going up as far as I can see. Yeah.
Yeah. And even with the immigration too, when we talk about the investment properties, you're giving others a place to live as well.
Yes.
Right. Because with your investment properties, whether, you're renting the upstairs, you're renting the downstairs, with immigration, of course, individuals coming into the country, then it's creating a space as well. Right.
Oh, for sure. And what do most people do when they first come into a new country? They rent. Right? So there's an opportunity for somebody. We talked about getting a second property or third property. Now you can find somebody to rent that property to pretty easily, right, at that point, right? And if it's a condo or whether it's a basement apartment or something, and just make it legal. That's all. That's all I have to say.
Yeah, make it legal, and you want to also make sure, of course, that the lease agreement and all that, you put everything in place, because you've heard the other side where individuals, of course, or the homeowners are getting a bad rap. They say renters rule, right? That's what.
Well,
so we want to make sure that it's fair on both sides. Right?
Oh, 100%. No, for sure. I mean, I represent more landlords than I do tenants. But tenants, for the longest time have been favored by the landlord and tenant board. That's no
Yes.
secret, right? They
Yes.
do have a lot of rights, etc.
Mhm.
And I can't. And I'm not blaming them. I'm not taking one side over the other.
No, yeah.
But there are great opportunities out there for
Mhm.
both, for landlords especially. Yeah.
Yeah, 100%. And also, so that you know as well, one of the I can't remember what the agency is. Maybe if I find it, I'll post it later. But with regards to you having to pay rent, a lot of individuals are not being they're not being rewarded for that in terms of where their credit is concerned. So an organization has been created where you have to opt in. The landlord has to opt in, right? And you have to opt in as well, where when you are actually paying your rent, it can now be reported to the credit agency, because it is something that people pay consistently, but of course it doesn't help to build your credit. And
No.
credit, we spoke about credit, definitely is very, very big, right? It makes a difference of you being put into a box and having options when you do decide to purchase a home, come out of that rental situation. And you want to know that, one of your biggest bills that you're making sure that you pay on time every month, that it's being recorded on your credit, right? So there is an option that's available now where you and the landlord can opt in, and where it can be reported to the credit agencies to make sure that that's tracked too.
Oh, good. That's good to know. I didn't know that. Fantastic. So, I mean, one last question. So you spoke about bad credit, and so I'm just wondering, are there opportunities for someone with not so great credit to get into the market as a homeowner?
Yeah, there is opportunity. However, your options are a little bit more limited. Remember when I said, it's the difference between you being put into a box and having option, right? So
Right.
having bad credit does not mean that you can't get a mortgage. What it does mean is that, the product you're going to get, the interest rate may be a little bit higher, right? It may mean that you're going into the private sector, all right? Maybe you are an investor and you simply want to flip a property, right? You're going to purchase that property, you're going to flip it. You may not really want to be tied into a 5-year, 3-year, even a year type of mortgage, right? And so it might be the private side that it doesn't matter if you have bad credit or not. You're okay with going to the private side because you know that in the next 4 months, you're going to complete that project. You're going to, even if the mortgage payments are a lot for, let's say it could be 3,000, 4,000, but you're okay with that because in 4 months, you're going to be able to sell that property, right? So, the private side does have its purpose. But, for it, I had a client actually where they had, double bankruptcy. And unfortunately, we had to go to the private side because no lender was touching it.
Okay.
Right? Based on that.
Based on that. But you were able to still get them a mortgage, get them into a property. How long ago was that? Can I ask how long ago was that?
That was around April.
Oh, this year. Okay.
Yeah,
good. Well, I looking in hindsight, they might be a little bit nervous about that because they're paying the higher interest rate. But I'm pretty sure that in a year or 2 years from now, they'll be happy they did it.
Yes, exactly. So it's really, I have this quote that I coined: uncomfortable yourself now so you can be comfortable later.
Excellent.
If you're able to do that, you're able to look beyond the current situation, because if you can really suck it up, I know it's private, I know it's a little bit higher of a monthly, payment, but if you can suck that up for about a year, and then once you're able to refinance, into a traditional mortgage. During that time, you're working on your credit though, because you want to make sure that you position yourself. It's always about positioning yourself 100%. So that you can, of course, make the transition and get into a better situation for sure.
Excellent. No, that's an excellent point, and an excellent point to end off with. Keisha, thanks as always. Your best way of having people contact you. I've got your phone number and email up there. Is that the best way?
Yes, that is the best way. And do keep in mind as well, I do also do monthly mortgage seminars, and very detailed, very, I really break it down with regards to credit, because once again, credit is important, giving you those tips and tricks how to build, maintain your credit. And I break it right down to amortization, to variable rates. When you come out of that, seminar, it's a wealth of information. So far, the feedback has been 100% wonderful. They come out feeling, wow, I feel like I know exactly where I am and what I need to do to get to where I need to get to. It's about positioning yourself so that when opportunity knocks, you're able to take advantage of it.
Excellent. Well, that's great. Thank you for sharing that, Keisha, and enjoy the rest of your day.
You as well. Thank you.
Thank you,
Bye, everyone.
everybody. Thanks for tuning in.